Our next presenter, Richard Marshall from NextTrip. I started NextTrip about, February, I think. I think, again, sort of a unique sort of mix of two industries. I started out thinking one thing about this, but I'm quickly, as he's added pieces to this, I'm quickly becoming, and I think Richard will touch on some of this. I don't know how much he can touch on all of it, but I do think that the business is starting to gather a lot of momentum around the media piece of this. And while I still sort of look at the travel piece as being obviously congruent with that, I think there's a lot of things going on, and I think there are probably some other things that are going to unfold that are going to bring some clarity to this. There's some visibility issues with it because they're really just ramping this, but I think as we get through the next couple of quarters and we get a few more data points, I think some of this is going to become a little bit easier to decipher, and then I think the valuation is going to be easier to get your arms around. So.
Thank you, Dave. Thank you for the opportunity to be here. I think last year our CEO and founder, Bill Kirby, made a presentation. We've made huge advancements this year. As we've already heard, I think one of the underlying tones here is the difficulties in the micro-cap, small-cap market for an emerging company. Capital, cap tables, investors, all very difficult. We've navigated through that, we think, very well. And acquired a number of companies. We went public through a reverse merger into a company called Sigma Additive Solutions, and we are now fully on our way as a NASDAQ public company. What I will say is I'll try to be quick here. I know you've heard two cannabis companies ahead of me, and so I'm sure you're all hungry and ready for lunch. NextTrip, what we're doing here, we're calling it the intersection of media and travel. We've been buying up travel companies, travel agencies, specialty areas. We do not want to, we will not be going head to head with Expedia, with Booking.com. They've got incredible models, but we're coming at this in a very different place. We've got concierge travel, luxury travel. We're going after travel agencies, travel agents. But the media side is the part that could be very, very substantial. We started early this year with our own brand called Compass TV, which is a fast channel streaming content, 1-hour shows. And then in the spring, we went out and acquired a company called Journey TV, which was an established channel that had been very successful during the pandemic. And we've put this together. And so we're building a flywheel system, really an ecosystem where the consumers at the front end being engaged by media, we're monetizing them at that point through conventional advertising and other ways. And then also we're kind of driving them towards a travel transaction ultimately. What's interesting is Expedia came out just 2 weeks ago with their annual survey. At the top of the survey, they said that video is now the biggest driving influencer for travel conversions. And that's where we are. And what we've done over this past year and what you will see over the next several months is we've built an ecosystem that will have gone from very few viewers to currently about 50 million viewers. By the end of this year, there'll be another 150 million viewers through a joint venture I'll touch upon here shortly. And then we're looking to do another piece of the puzzle that could give us another significant size. Part of what we've put together, the team on our media side, on our technology, they came out of Electronic Arts, which built some of the biggest ecosystems and successful ecosystems out there. They were all about user engagement, keeping the consumer in there, having them come back, loyalty. What they've designed for us is an overlay technology. So in these streaming assets that we've been buying up, we also have an ability to push over the screen, whether you're watching it on your TV, watching it on your phone, watching it on your tablet. While you're watching a show that's got skiing in Utah, we're pushing that resort, that hotel, can be booked through our booking enterprise or through our booking platforms with a 30% off coupon. Click here. We can do it through QR codes. We can do it through engagement tools, depending on what the screen is. This is the secret sauce. This is what we've been building and put together, and this is what we've launched. So the travel brands that we've pulled together this year since going public on the NASDAQ, we acquired Journey in the spring. Travel Magazine was one of our existing portfolio owners. We've done significant improvement to it. I would suggest you go on there, take a look at travelmagazine.com. It's got AI tools up front. It can give you tremendous amount of information if you're looking to go to Vancouver, you're looking to go to New York, you're looking to go to Bangkok. You can do searches, drill down, get all the information you want. You can see short form video. You can see long form video. We've got it all for you. We bought, NextTrip bought a proven, scalable booking platform called booklet.com. During the pandemic, they were one of the casualties of the pandemic. They were booking about 500 million in travel annually, but their platform was very, very substantial. They were a big competitor, obviously, of Expedia and Booking.com. We brought in some of their key sales marketing team. We brought in some of their technology team, and that became the backbone of everything that we're doing on the travel side. So we have a very proven, scalable platform that we've done a tremendous amount to. We also bought 5 Star Alliance this year, a 20-year-old travel agency, focuses on high-end luxury travel. They've got 5,000 properties around the world. The high-end stuff, average nightly booking is around $870 a night. All of these entities complement each other because when we bought 5 Star, they have 500,000 viewers or visitors on their website monthly. They may find a hotel in Bangkok that's just too high for them. And so 5 Star over the last 20 years would have just let the consumer move on. Now, because of what we have with our NextTrip and our other booking assets, we have the ability to keep that consumer in here and say, well, we've got another opportunity for you with a Hyatt or a Hilton, whatever it may be, for $200 or $300. And so we're seeing a compounding effect of these assets that we've acquired. So Journey, when we bought it, it was an existing station on Samsung, had originally had about 50 million viewers. Over the last several years, it had dwindled down to around 20 million viewers. Why? Well, a religious organization called Ovation bought them 3 years ago in a big roll-up of fast channels. They didn't see the content fitting within their model. They stopped putting money into it. They stopped putting content in there, and the channel went down, giving us the opportunity to buy and get ourselves our first 20 million eyeballs. Since we've taken it over, our team, these EA guys that came in, have taken it from just a standalone fast channel on Samsung TV. It's coming out on Apple TV, Amazon Fire. It's now up in Roku. It'll be an iOS app in the next week or 10 days, an Android or Google. It'll be ubiquitous everywhere. In addition to that, what we did was we went out and said, okay, let's see how they were successful with 50 million eyeballs. We sat down with Samsung TV, and we've mapped out and been acquiring content and have taken the available content in this up into the several hundred hours of content. So we've got the Bear Grylls shows, we've got the Gordon Ramsay shows. This is the type of content that everyone likes to watch, stream, dream about. But to us, it's also a tool, because while you're in there and you're looking at a show, Gordon Ramsay's cooking at a resort in Tahiti, it may inspire you that you want to go to Tahiti or research more. We have all those tools, we have the overlay, we keep you in our ecosystem, and we might be able to monetize you. So we have underway, as I said, we had 20 million eyeballs this spring when we acquired Journey. We've mapped out, we'll have about 50 million people in our ecosystem by the end of this year. We made news, obviously, in the acquisition of Journey and what we were doing, and a little company called KC Global Media came to us. None of you know who KC Global Media is, so I'll tell you. The former president of Sony Global Media and the executive vice president of Sony Global Media were the founders of KC Global Media. They took out all of the Sony streaming assets for Southeast Asia. This is their company. They came to us when we bought Journey. They said there is no one place we can go to get travel content, this inspirational. Travel Channel is dead, which was bought out for actually 1.1 billion, but it now does paranormal activity. No one has this type of content. They wanted it. They made a strategic investment in us this summer, and the founder, who was the president of Sony Global Media, joined our board of directors, bought shares in the open market, and has funded us to take all of our content into Southeast Asia, where they have 150 million eyeballs. We will start pushing our content there and our program there in the partnership with them in December. That's how we move from 20 million to 50 million to a couple of 100 million. I would say we've been a buyer, we'll continue to be a buyer. We're looking for platform distribution and content, so I would watch this space closely. On the booking side, as I said, we have proven capabilities in that we bought the proven out booklet technology and platform. Expedia feeds all of their product into us. United Airlines, these are just examples, Hilton, etc. So it doesn't matter what you want in travel, we have the ability to fulfill your order. We acquired the luxury platform of Five Star Alliance. They are a small shareholder in one of the largest travel agency consortia in the United States. They brought us a lot of relationships, a lot of know-how, and we have, with them, brought them technology, because as a small operating agency, they didn't put a lot of money into development themselves, marketing, etc., and we're already seeing growth under our umbrella. As I said, we are trying to focus in areas, or we're not trying to go directly head-to-head with Expedia or Booking.com. Another area that's wide open is groups bookings. Groups booking may be a destination wedding, it may be a corporate retreat, it may be a conference. It's very hands-on. If anyone's ever had to put together a group like that, it's a real pain. We have developed a technology tool, and we announced that earlier this year, and then TA Pipeline came to us, someone else in the group's booking that has an RFP tool. They did about 8 million in revenues. They only had about 50 agencies that were using their tool because they'd only grown by word of mouth. They'd never put any marketing into what they were doing. Since we acquired them in August, we are moving their consumer base, or their users, of 50 agencies to about 300 agencies over the next couple of months. They only had about 50 resorts or properties that they represented. We have introduced them to another 150 properties, so there's even more opportunity for their consumers to book and grow. We expect substantial growth from that. So again, this is what I've been saying. Since we've gone public, we have been pulling together key assets under the technologies that we've been building and having complementary businesses on top where there's a compounding effect. This chart just quickly shows the areas that we are in. You can see the big competitors, and no one really focuses in the areas where we are. And that's where we expect to be the leader. We really believe this intersection of media and travel, and how the consumer is now being inspired, and how, let's face it, the younger generation, they love to stream content and watch content. We advertise, we make money through advertising and the overlays. So it's a dual revenue model if you think about us being a travel company, and we're in a recession. Bookit's going to suffer. Expedia's going to suffer. We won't. In a recession, people stream assets, watch TV more. We've got the advertising on the other side. So we think we've got a very interesting model here in this space that will be very rewarding for our shareholders. We got here through the reverse merger, but through really a very well-heeled board and group of investors and founding investors. On a fully diluted basis, we're about 10 million shares issued and outstanding. And the board of directors, through direct investment, owns about 65% of that. They've put about $15 million into the company over the last 18 months to get us here. If we look at Andy Kaplan, he was the president of Sony Global Media, just joined our board earlier this year. David Jang headed up AIG's alternative asset arm. He was also the president of Bank of New York Mellon Trust Asia Pacific. He's written about $3 million in checks, joined our board of directors. Carmen Dejas is a well-known global attorney. Jimmy Bird built one of the biggest infrastructure companies in North America. You can pick up the phone, call the head of AT&T, call the head of Comcast, all of those places, because he did all the work for them. He's written substantial checks, joined our board. And then Steve Kircher owns hotels and has been in public companies most of his life. The management team, Bill Kirby, that was here last year, when we acquired 5-Star, John McMahon became our chief operating officer on the travel side. Ian Sharp and Loic are the guys out of Electronic Arts on the media and our technology side. Amy Proust came in here from the Booklet acquisition and had built that business up to a $500 million business. In addition to the content that we go out there, we license, obviously, a Gordon Ramsay, a Bear Grylls. We're also producing our own content. And the production of our own content, people will sit there and go, well, how can you do that? How can you have something that may be interesting to the consumer? The Journey team, this production team, were the ones that did a lot of original content for Journey when it had 50 million eyeballs at its launch. They've won Emmy Awards. They're producing shows now, and the production of those shows is paid by travel companies. So as an example, we announced about 6 weeks ago a new show that was called Tide. Tide is being sponsored by Sea Cloud Cruises. They paid the entire balance of the production for it. We hooked them up with Ben Robinson, the chef from Bravo and Food Network. He's the below deck chef, a well-known celebrity out there. And the show will be a 1-hour show on one of these Sea Cloud cruise ships, showing what they cook, what they do in the culinary, what they do when they get into Antigua. You'll follow their ports of call. You'll see what it is like being on the ship. That's why Seabourn wanted to do it, because they love a show out there that, again, they can promote all of their people to come towards. While they're watching it, we're getting advertising dollars off them. And if they're interested in booking it, we can push them through the booking funnel into there. So these travel companies are becoming very, very big advertisers within our ecosystem. Why? Because our ecosystem, again, has gone from 20 million to, by the end of this year, it's closer to 200 million. And I would tell you early next year, it's probably closer to 250 million. And they want to get in there and get to those consumers, because video content is the biggest inspirational tool for travel. And then we have attribution technology that can move that advertiser that pays us. C-Cloud pays us to put that advertising out there. We can prove to them that their $250,000 in advertising spend actually went through a transactional funnel to a booking, either in our booking channel or in their booking channel. Attribution technology. On short form video, again, another area that we're going into with Travel Magazine, we think about all these TikTok, YouTube influencers that are out there. They're paid $10,000 by the resort to go down there. They get to stay at the resort, and then they push it across TikTok, other venues, come here, go book. Well, that's great, but how do you know someone booked if they actually influenced them to do that? With our technology, when they put that on our platform, they can participate if someone books. And that resort, the advertiser that's spending the dollars and trying to get that influencer to actually drive traffic, has a way to actually track a return on their spend. Attribution technology, again, something that will be very significant for us. So this year, after the going public reverse merger transaction, we finally got our NASDAQ approval for the formal initial listing. We're trading around $4 a share, about 65% insider ownership. Dave was one of the first ones out. I will tell him that he won't be lonely. There are other research reports that are coming on the company in the first quarter. Why? Because in the first quarter, we did $150,000 in revenue as we put this together. In the second quarter, we announced we did $750,000 in revenue. Third quarter will come out in January. You will see a marked improvement. Again, third quarter over second quarter. Why can I tell you that? Because in this space, when we book advertising, when we book travel, you actually get to recur the revenues, or the revenues become items at time of travel or at time of the advertising. So we know our booking channels and our advertising channels, we've got a lot in the pipeline. There will be bigger growth Q4 over Q3. There will be bigger growth Q1 over Q4. We're on a very, very good trajectory. This is the first time we're kind of getting out. We were out just a few weeks ago at a conference. We appreciate Dave giving us the opportunity to be here. We do expect, based on the acquisitions that we've done and the books of business that we've done, that we'll be in a more of a $25 million annual run rate next year early. And this was without really putting any scale into the KC Global Media launch in Southeast Asia. But going from 20 million eyeballs to a couple hundred million eyeballs and monetizing them through advertising, which is a much higher margin business than travel, but they complement each other, because this is the content that people are viewing to make their travel decisions. Everything that we have done with our electronic arts guys is making this searchable. You can go find it on any platform by the end of this year. It'll be a YouTube channel, you name it, you'll find us anywhere. And it's not just a fast streaming channel, we've made it into a video on demand as well. So again, if you're interested in Tahiti, you can come into our IP properties, our platforms, and do a search for Tahiti and see 10 or 15 or 20 videos there. If you want to do it and drill it down by a city, by a resort, all of that readily available, readily fileable. And while you're watching it, we'll be making money off you while we're advertising to you. So that's really us in a nutshell, very quick. Any questions?
More questions?
Lot to go through. Thank you.
I think it's, I feel like it's a little hard to get your arms around right now in terms of just visibility and numbers. They provided a little bit of it here, but I think part of it is that I'm not exactly sure, how all of it's going to roll out. But I do think the big picture is that they're going to end up, with this media piece, that they're probably going to end up with increasing amounts of revenues from an ad perspective, or value per ad. And then I also think it's interesting that what we've seen so far in some of the media piece is that some of their relations in the travel space have actually driven some of the media, which I think is something I hadn't really kind of thought about, but I think that's kind of what's going on. And so I think as this unfolds and it all becomes a little clear how all the pieces fit together, I think there's going to be a great opportunity for evaluation inflection. So,
yeah, just touching on that, exactly right. When we launched Journey and had it under the relationships that our travel teams have, that have been long and deep relationships in the travel space. We had Palladium Hotels came to us and said, we want to do a specialty advertising program. Playa Hotels came to us. Altalia Hotels came to us. More recently, Royal Caribbean's come to us. Hyatt has come to us. Big OTAs have come to us. Why? Because now they know we've gone from start to a couple hundred million eyeballs in very quick, that they can push their content. Again, they want to advertise where the consumer is interested in being inspired, and this is all inspirational content. They don't know that in the magazine, in the stills, and then there's the attribution technology on top, that we're agnostic, because advertising is a much higher margin than travel. And so if Hyatt Hotels says, you know what, when you're pushing the advertising with your overlay technology, we'll pay you a premium to push that consumer into our own booking funnel instead of you doing it. We're fine because we actually make more money than just on the transactional booking. So it's a very interesting model.
Great, thank you. Let's have lunch.